Hello everybody, welcome to the TraderMerlin show for your weekend edition, your Friday edition. I've got my Balashi beer shirt on today in honor of the Aruban National Beer. Had a few pints of that along the way. Anyway, hope you had a great day. I'm not a big April Fool's guy, so I'm not pulling any big April Fool's pranks on anybody out there. Hopefully you didn't get beat up too bad with silly jokes being pulled on you. Anyway, cheers. It is a whiskey kind of Friday for me. Of course, a short work week, only doing Wednesday, Thursday, Friday this week, as I've been on vacation, as my caramel complexion may attest. So, cheers everybody. I'm going to raise a glass. Hope you all had a great trading week. Sip them if you got them. If you're drinking orange juice or water, cheers to you as well. All right, let's get this going. So, as you can tell by the graphic to start the show, trading week wrap up. That is actually from the beach we're at out in Aruba. Some beautiful sunsets to be had, but a lot of great trading stuff going on as well. So I wanted to talk a lot about kind of the macro picture. One thing that I didn't get a chance to put into the Monday Morning Must-Knows, which is a program I do for Online Trading Academy, is this trading week was actually a fairly important one. You guys might remember we've been talking about stagflation for quite some time. And stagflation is generally a combination of several different elements that, when combined, they represent stagflation. And those three main components, there's obviously many to them, but the three main components are you have growth slowing, which one of our primary measurements of growth in the US and most economies around the world is going to be of GDP, gross domestic product. Now, there are other measurements of growth, but that's just the big cornerstone one that we all look at. So this week, on Thursday, we had our final GDP number come out. The second component of a stagnant or stagflation type environment is rising inflation. And of course, we've all seen it. There's no mistaking it at this point. There's no more talk of transient. That's all BS. There is absolutely inflation. It is much higher than I think most people expected. There was also a very important piece of inflationary data that came out this week. And then thirdly, unemployment. Generally in a stagflation type of environment, you have unemployment rising. And of course, we had multiple employment numbers. We had ADP non-farm employment change, we had the JOLTS job openings, and the unemployment rate came out. So the trifecta this week, I almost want to call it the stagflation week. I should have made a more fun graphic, but that's really the piece that I've got here, the stagflation argument. So as we take a peek over at the markets, at least what happened today, here is our result for the overall week. Now, today's trading action wasn't that great. It was a little choppy, no real direction, didn't have any big up or down moves unless you're trading the Russell. You can see this little spinning top here on the S&P. But all in all, it was a pretty darn decent week. 1, 2, 3, 4, 5. You had lots of action to the upside. If you look at a weekly calendar of the S&P, though, you're fairly unchanged, right? You actually have a shooting star formation on the weekly here. Let me get rid of that line. And what does this tell us? Well, first off, let me run through some of those numbers here, and I'm just going to go to Forex Factory. We can use a bunch of different sites to see this, but this is going to make it easy for me to show you all the charts real quick, just to put it into perspective. And again, I'm not here to say, oh my God, this is stagflation, or hey, everything's rosy. It's just, let's look at the numbers, right? The facts are what they are. And of course, as we go through this economic data, I'm well aware that some of you are going, all this data is cooked. It is manipulated by our government, by our bankers, by the people who put that stuff out there, and I tend to agree with you. However, it's all we have to go off of. So let's take a peek at some of the data. Let's start things off early in the week. I'm going to start with the JOLTS job openings, right? So we'll go all the way back until Tuesday when that number came out. So you can see here the previous number for JOLTS job openings, meaning positions available for people to take, were 11.28 million. Expectations were that we were going to drop to 11 million. Well, we dropped, but nowhere near expectations. This is actually a relatively positive sign. That means that there's plenty of opportunity for people to get back to work. So we can look at a historical chart here. I think this speaks volumes. Obviously, you saw that little dip back in early 2020, but since then, there's jobs, right? So I apologize if I sound condescending or like an a-hole, but if you have a friend who is sitting there going, I don't want to go to work, I can't find a job, there's nothing for me, they're either lazy or they just don't want to work or they have a disability or something like that, because this chart speaks volumes. There are more jobs than there has been for any point on recorded history, at least on this chart. Going all the way back into 2005, More jobs than ever in history right now, which is a great sign for a robust economy, yet we still hear about, labor participation and people not participating. So all in all, for anybody who's saying stagflation, this is a piece that says, I don't know. I don't see unemployment being an issue. When you have this many job openings, it tells you that people are expanding, they're looking for employees, and if my restaurant experience is any indication here through Orange County, they need people badly to work in restaurants. It seems like no service whatsoever. So this is one strike against the argument of stagflation would be the JOLTS job opening. So let's keep on the job comment talk track here and see where we end up. ADP non-farm employment change. So this is telling you the number of jobs created, kind of new jobs, right? And that was expected to drop from 486,000 to 455, as you can see here. Well, you know what? It really did right in line with expectations. And also, that's kind of historical norms. You can see back here, we have, if I'm going all the way back into, let me get the years here, going all the way back into, let's say, 2007, you can see that during the financial crisis, we were, negative 491, negative 600, something like that. But when things were rosy in 2015, 16, 17, we were looking at about 150 to 200,000 new jobs created. Right now, we're at 455. That's far above the historical norms as well. So again, jobs are there, plenty. What did Tom say? Or trading is going well enough. Why go find an employer? Yeah, sure. Yeah, you're right. I mean, there's a lot of reasons out there, Tom, why people may not be looking for work. But I'm directing this at myself, as I know a few people who are, I don't know, they're like playing the victim role and they don't want to go back to work. I'm like, well, get your butt back to work. There's plenty to choose from. Clearly, there's work out there. And of course, if more of these people who are deciding or just choosing not to work went back to work, we would see the labor participation rate increase. And that, of course, would help with the unemployment numbers, and things might actually be an even rosier picture with regards to GDP. But that's all just kind of the domino effect of people choosing not to work. Now, that was the unemployment side. I got one more number that came out on Thursday, which is a critical one, and that's your unemployment number. On Friday. To today, here's your unemployment rate. They were expecting it to drop, meaning that there's less unemployment than expected. It was supposed to go from 3.8% to 3.7%, and all of a sudden, it went to 3.6%. So this chart right here, we are now pretty much the exact same level we were right before the pandemic with regards to unemployment, right? We're 0.3% higher, but really this is a great unemployment number that came out. So I wanted to start there because this is all of these three pieces looked at. JOLTS job openings, ADP non-farm employment change, and the unemployment rate are basically saying the job market's good. So you can't have the stagflation argument at all if unemployment is dropping as sharply as it is. Granted, it could be manipulated, but hey, let's just look at the data. So we started with jobs. Next is going to be inflation. Now, we talked about PPI and CPI last week or last couple of weeks because those numbers have been surging. Of course, the Fed has made it very clear. They look at core PCE price index numbers. I'll scroll up here. We'll look at those numbers, which came out on Thursday. Here is your core PCE price index, and inflation actually dropped a hair. All right, here is the chart of it, and you can see that it just dropped down just a little bit, right in line with expectations. Now, inflation is still high, which doesn't mean that inflation is very low. It's really high, but it's not surging like it was over the past few months. I personally think that you're going to see the next month's reading much higher because of Russia, but that is my speculation at this point. However, we dropped a little bit. So there's one more argument against the stagflation debate. And I've got one more, which is going to be growth. All right, growth is a factor. If we start to see growth declining, that's a sign that we might be in a stagflation type environment. Now, Wednesday, we had the final GDP numbers come out, and there's non-farm payrolls. Where's the GDP? Here's your final GDP. It was expected to come out at 7% and stay exactly where it was at. We actually dropped to 6.9. So you could put a feather in your cap if you are a stagflation proponent, saying, hey, GDP is slowing. However, it slowed very, very, very little. So anyway, I wanted to start there with kind of that stagflation discussion and really beat that one up a little bit because it's one that keeps rearing its ugly head. And while I agree with Bill Addis that it is a nasty thing if it does come to fruition, right now the data points don't reflect a stagflation type of environment. So we don't have to worry about that one right now. I might make this a monthly thing where I do a recap of those 3 variables and see. And maybe that's what I'll do. The final show of the month, I like to do a recap of the numbers for the indexes and commodities and things. Maybe the first of each month, I will now do a stagflation recap and see where we stand there. How do these people pay their bills? Unemployment? I don't know. Maybe just going off of savings. Hey, Bobby, good to see you. I'm not sure. I know of one person in particular that they're working and they're doing an off-the-books jobs, which doesn't help really anybody out with regards to reporting, right? So he's got a job, but he's not declaring anything, and to each their own. Whatever. I won't make this an ethics or political debate. It just is what it is, right? So, starting to prep a new round of put buying, Merlin. Yes. Actually, I'm starting to prep a new round of put selling on some in my 1% portfolio, but possibly some buying here. But I'll get to that as we progress. All right. Let's see. The night the rumor got out about oil reserves being released by the government caught me on the wrong side of a trade and never really got me. My bad. Bummer. Sorry, Joe. And that's the problem of taking home overnight positions. You guys might remember. Oops. Don't want to spill the whiskey here. You might remember that my 10 laws. What was where it is? Rule number 8 was don't take home overnight positions. Specifically because of that. You might have the perfect position on, and all of a sudden, some government action happens, or something crazy happens. Some CEO gets caught with his pants down in a bathroom with a prostitute or something. You never know. There's always weird stuff. You guys might remember the guy Broadcom. Unfortunately, there's a huge delay here, but you might remember Broadcom CEO. Here's a guy running one of the larger kind of tech companies, if you will, and he's out there having ecstasy parties in his basement all the time. It's like you just never know. Once that got out, Broadcom took a big dive, but you never know what the hell's going to happen with prices and news. So, that's one of the main reasons. Like for overnight positions, I try to stay in ETFs or something that's diversified, where you're a commodity like oil or wheat or soybeans. Those can have huge rips off an announcement like that. And, again, I think at this moment, you've got to be really careful trading oil, period. Some of you may have heard or read the news articles about Putin basically saying, hey, we're not going to accept euros. We're not going to accept dollars. We're not going to accept pesos for our commodities. You want to buy natural gas and oil from us? You have to pay in rubles, which to me, honestly, is a brilliant decision on his part. It really is a smart decision on Putin's part. Not to give him credit, but that was a smart decision because he's got him kind of cornered. He's like, you're doing sanctions against us? I think 33% of Germany's oil comes from Russia. So if all of a sudden Russia gets cut off because Germany's not going to pay in rubles, then you have much more conflict. And what's going to happen to the price of oil? The price of oil will most likely start to surge to the upside. And these types of announcements create havoc for commodities. So be really careful if you're trading any commodity out there. Also the ruble, and you might want to look at that chart. That's been a pretty wild chart over the past couple of months, and I don't know if it will change at all. Change to the downside here if all of a sudden people have to buy rubles to buy their oil and to buy their natural gas or wood, whatever they're buying from Russia. Crazy times, folks. Crazy times. All right, let me roll through to some questions. I want to go to this one real quick because this was from yesterday from Zanzibar. And again, if you have questions, just do a couple question marks first and send those on in just like Darren did. Darren, I'll get to your question for sure in just a minute. Let me get through these couple here. First question was from Zanzibar. He says, short coop? I asked about the great bearish Harami, March 29th and 30th, and you are talking Coop and Walmart. I'm not quite sure where I think you're angry that I was talking to. I said the bearish Harami would have been and still can be great teaching experience, and I want to know what you think of the chart pattern and how it turned out, and what you also think of bullish and bearish Haramis, and if it matters to you, where you find them on daily and weekly charts. I love these patterns. I'll make that very clear. I love Harami patterns. I love shooting stars, hammers. Those are my favorite 4 patterns, right? Bullish Harami, bearish Harami, shooting star, and hammer. That's it. Number 1, hammer formation, by far. And I can explain why if you guys want. So let me get my drawing pen over here. Get my artistic skills ready. So I'm going to go back to the chart over here, and we're going to go look at Coupa software, right? Because I was talking about, let's go to the daily. I was talking about shorting it because of the trend overall. And what Zanzibar is pointing out are these two candles right here. I'll put a yellow box around those two candles just so you have a understand which ones we're talking about. It's these two right here. Unfortunately, it's snapping, so it's gonna do the 3, but it's just those two right at the top here, right? That technically, just so everybody knows, that is not a harami. Just want you to be clear, that is not a harami formation. I know some people think it might be, but it is absolutely not a harami formation. There's specific criteria that formation does not meet. So let me bust out my drawing skills here. I apologize to anybody who just despises my drawing. I didn't go to art school, so we'll have to deal with it. Plus, trying to draw with a mouse and this little drawing pad over here is a little bit challenging. So let me bring up some drawing tools, and I will now attempt to show you what this means. So the pattern that he's looking at over there, there it is. The pattern that we're looking at on Coupa software is a green candle. Right, you got a little green candle. It's got a small little wick on the bottom, has a wick on the top, and it's green. All right, and then the day after, you have a candle that looks like this. All right, so you've got a little red body. This is a red candle, and you've got a small topping tail and almost no bottoming tail. The problem here is a true harami. For those of you who understand haramis and how they work, if you have an uptrend, and let's just assume we've got an uptrend, got a price moving up, then you have this nice green candle, however it looks. Let's say that's your green candle. To be a true harami, it has to fit within the body of the previous day. So whatever, it needs to fit inside of that range. Tails and all. So you could have a small little body like this, a long topping tails. Great, that's a harami. But because this one over here on the left, you can see it's below it already, it's not a harami formation on a daily. It has to close inside there some way inside the body. Now, that to me is being very, very, very picky. Isn't the harami next to that on the left? Yes. Okay, great, Karen. So let's show you that one. Because you're right, but not fully. What you're saying is, what about these two right here? Would you call that a harami? And the answer is yes, because this candle, this little green one, fits completely within the body. However, the problem is, you're not going to have a bullish harami. This is a bullish harami, because you have a red candle and a small little green one fits inside of it. You don't have a bullish harami on an uptrend. Right? You have a bearish harami. So what you're looking for from a probability perspective is I want to have, there we go. I want to have price moving up and then have my, my big candle there and my small candle like that. That is a harami formation. In a downtrend, boom, same thing. I'd ideally like to have a red candle followed by, a green one. Those are this is a bullish. Sorry, drawing tools. Bullish, and this one over here is bearish. Okay, so those are the two main setups. And to answer Zanzibar's question about location, it absolutely does make a difference, right? If I have something that's moving sideways and it has haramis, I don't care. Remember, harami is supposed to signify kind of the end of a trend where things are starting to slow down and potentially going to reverse. So for that to happen, I need either an uptrend or a downtrend. When you have price moving sideways, you're going to have quote-unquote haramis all day long, but they don't mean anything. They mean nothing. So now the question becomes, how do you trade these ones? And it's very easy. This is, I guess it's a matter of personal perspective, or personal preference. I have my way to do it, and that doesn't necessarily mean that it's right, but that's the way I do it, so I will show you. I'll start with the bearish harami, which is in the middle here, and that's generally going to be a red candle right here, followed by a tiny little green one, okay? So for me, it's simple. You have one of two triggers. Basically, since these two candles together make up the harami, you're going to put a line across the low of the red candle, and basically say, if it now opens and drops below this, that's your trigger to go short, right? If it gets below that line there. Now, some people might be more aggressive and go put it underneath the green one, which gets you in a little bit earlier. No worries, Big Ab. Good to have you. Thought you didn't love me anymore, Big Ab. Happy Friday, my friend. So you can see that there's a matter of selection process here. Some people are much more aggressive, are going to put it underneath the quote-unquote baby of the harami, which is this little green candle, or go below the whole formation. I personally would go under the whole formation. That's my preferred way to do it. Granted, you're leaving money on the table, but the benefit in that situation is you now have confirmation that this is actually moving to the south side. And again, on the bullish harami, which is supposed to indicate a reversal to the upside, look, you've got two lines, right? Oops. You got both of those are options, choices to go long the security if, in fact, it breaks above those lines. Very, very simple. I am not trying to overcomplicate things. I'm not trying to make it more challenging than it has to be. That's about as simple as I can make it for everybody out there that looks at formations. What time frames do you use haramis on? Great question, Tom. I always look at dailies. I'm a daily harami fan. I'd say almost all my formations for candlesticks are on daily charts. Now, that's just a matter of personal preference, right? Some people here don't believe in that. You can, somebody like Bob Dunn will say, oh, you got to start on the weekly or monthly. Great. Whatever works for you. I personally like to start with a daily chart. That's why I would say is my favorite time frame, because it's easy to flip through. Most people can see a daily time frame. When you look at price charts on CNBC or Fox or something, they're generally showing you a daily chart. So those are the ones I feel have the greatest probability of being that quote-unquote self-fulfilling prophecy. I always start on a daily, and then if I want to, I'll work my way down from there. Plus, remember, a large part of what makes these patterns work are gaps. And in order to have a gap, I need to have a closed market. So if I'm doing candlestick patterns on a 5-minute chart, a lot of the patterns I look for, I'm not going to get. Right, so if you're looking for haramis or engulfing patterns, you're not going to find those on a 5-minute chart because you need the gaps. The gaps would help create that picture. If you are looking for shooting stars or hammers, yes, you can find those on intraday charts, and I do look for those on 5-minute charts, 15 minutes, hourly, whatever you want, but not on daily time frames. It's very hard to find haramis and engulfing patterns on a 5-minute time frame, if that makes sense. Great question, Tom. You need to get Bob back on? Bob the Wild Man. Maybe I will. Well, you see, the big difference between Bob and I is I can see things from a lot of different perspectives. Bob likes to be, it's either his way or the highway. And if you don't trade his way, you're a fool. Don't even bother, right? So I'll see if I get him back on. All right, let's see. Tom says, I spent some time on a zero data expiration chat room, and they can't see beyond the super long time frame, like 15 minutes. I like to troll. Well, you know what? To me, at least in my experience, the bigger time frame you go, the more power and the bigger move you're going to have. So if you can grab onto something on a good trend that's on a weekly or a monthly time frame, and you could potentially have monster winners. Now, generally, you're going to be doing that with, smaller share size because you're committing that capital for such a long period of time. But anyway, Zanzibar, I hope that helped with the Coupa. Now, as far as the trading side of it, I personally, I wouldn't think of this as a great trading opportunity, these two candles right here. Because what you had was a real big impulse move after a gap down, and now it's just consolidation. So, yes, anything is tradable, my friend. It's all tradable. It's just where's the higher probability? If we look at this range-bound piece right now, here's, I'm just making some yellow box on here. We can go out really far, but I would actually keep this, I would cut that tail off, and I'd say, this is where we're at right now. And until it gets out of that range, which is, granted, it's a big range, it's $12, I would definitely just wait. And I have no problem leaving money on the table, guys. Again, I like to use my going to a party analogy. I hosted a Halloween party at my house one time, and people say, well, when should I be there? So 7 o'clock, right? And I think everybody here knows if you're going to a party and you say 7 o'clock, you don't show up at 7. Who does that, right? You show up at like 8, depending what type of party it is. So it's funny. I remember I had just taken a shower because, 7 o'clock. I figured nobody's going to show up till 8, maybe 8:30. And at 7 o'clock, like literally she was on her phone. I get this knocking on the front door, and I'm like, what the? Sure enough, somebody was at the party at 7. It was boring. She sat there for an hour and a half till anything really started happening. Point is, I'd much rather leave money on the table to confirm, to make sure that the decision I'm making is right. That's a far cry different than what I used to do, which was I would just jump on anything that moved. And, a lot of times you take some big losses doing that. Bob, a Chicago Blackhawks fan and an engineer hater. 2 strikes, but yeah, well. He's an interesting guy. Once you get to know him, he's an interesting guy. Yeah. I consider Bob Dunn a friend. So he's a good man. Unlike Sam Seiden, who I think is the scum of the earth. But, matter of personal preference, right? Okay, let's keep going. Hey, good to see you, Lori. Finish your simple options session early. Nice. Options made easy with Lori, huh? All right, thanks, Mimi. Let's move on to listener questions here. Big Eb, have you been to Aruba? I mean, it's Aruba and Budweiser, really what it is. But in every country I go to, I generally try to get a T-shirt, and it ends up being a beer shirt from them because I hate the little tourists. Yes, Steve, I don't do it daily. I've actually cut back significantly, but sometimes it just creeps into my head what that guy has done and what kind of person he is, and I just have to bash. So there you go. Let's go to this one. So here's an Aruba question as well. So we'll double dip because the Big Eb asked about Aruba. Says, why do you prefer not to get assigned on options? Why is that? Seems like selling calls premiums are primo. Also, what kind of cocktails are prevalent in Aruba? So I have no problem getting assigned. I think one of the things that I've learned with options is anytime I'm selling an option, I have to be okay either acquiring those shares or getting rid of them. If I'm selling a covered call, I have to be okay getting rid of my shares. If I'm selling a cash secured put, I have to be ready to take delivery of those. So I don't worry about that. In the case of SLV, which is one that's kind of an ongoing soap opera right now, SLV, today silver closed at lower than my price. My exercise price was $23.50. Today we closed at $22.73. So every week I'll see what the premiums are for Monday, but I may end up selling the 23.50s again on Monday for next Friday. And I'm probably not going to get over 1% like I did this week, but I'll get close to 1% for the week. Now, to Todd's point, if it closed today at 23.51, I'd be fine with that. I still got my premium. I'm still collecting premium, and I still am bullish on silver. So I sold those options totally fine if it gets taken away from me. Absolutely fine if my silver disappears. Now, the discussion that came up the other day, and this is something that I'm going to be doing probably next week. Here's my watch list of ETFs on the bottom right hand of your screen right here. Right? I have a little list here of ETFs that I generally am out there looking to sell options on. I usually sell puts on these if I find something that's had a pretty significant decline and the premiums are high. This was part of the discussion yesterday. If I have a bullish market, I really don't feel like I want to sell puts. The premium's just not there. So I'm hoping we get some nice slides. Like you look at XLI here. The premiums for puts have jumped significantly on XLI. So I may look at XLI on Monday and look at maybe potentially selling some puts. Do I think industrials are going to dive and take a dump? I don't think we'll see a huge slide, but I might find a level where I'll collect some premium that's going to be worth the risk to me. And I'll say, where am I interested in? So, for example, I've got a line way down here, which is the low we saw back on February 24th, right? I look at that line. That to me is an absolute line in the sand. Well, on Monday, I may look at this and say, I'll sell the 94 put options for XLI. And if it gets down there by the time and I'll probably do a monthly, so I'll go out to, I'll do the Aprils, which won't be monthly anymore. It's going to be like another 3 weeks. I'll do, for 2 or 3 weeks worth of time, I'll sell those options. And if it gets down here by then, great. I'll own those shares and I'll start selling covered calls against it. That's just the simplicity that I'm looking for. But Todd, I do not worry about getting assigned. If I get assigned, great. On the silver, it's a good example. I got assigned and I've been selling covered calls ever since. I started with monthlies, but now because it's so close to my initial, the target price, which for me was $23.50, to answer Margaret's question, I am selling weeklies right now. The premiums that I'm getting for the silver for selling calls on silver are really high. I'm getting about 1 to 1.5% for a 5-day window of time on silver at 23.50. Why wouldn't I do that? So if silver kind of bounces around and stays right where it's at, I'm going to make roughly 4 to 6% for a month on silver, something that I'm bullish on anyway. So there you go. If getting assigned is a concern, probably can sell a spread instead. Yep, exactly. Pro is 100% right. You could do spreads, which would prevent that from happening. I don't do spreads just because I don't have the brain power for it. Not that I don't have brain power for it. I just haven't sat down and mastered it. I got too many other things going on. But yeah, spreads would be a way to get around that. Also, you asked there, what drink is prevalent in Aruba? I stated an all-inclusive, Todd, when they have all these foo-foo drinks. I think they made up the Caribbean Temptation, the Cherry Dream, all these blended, high-sugar drinks that leave you nothing but a wicked hangover. So I don't know if there is a traditional Aruban cocktail. I do know they have the Balashi beer. That's their main one down there. While I was there, I was told, you got to be careful because these all-inclusive resorts are just watering down their alcohol. I can assure you, I watched them crack fresh bottles of Jameson and had me pour me a shot just so I could taste to make sure it was Jameson. Oh, it was Jameson. All right, let me go to, there was a question that came in early about crypto. I want to make sure I get to that one real quick. Where were we at here? Let's see. Well, Joe, you got it there. Are you still accumulating Bitcoin, $45,000 with the crazy moves it's been experiencing, and knowing there's a lot of buying that will subside after the Terra deal is complete? I don't know necessarily if it's going to be done when the Terra deal is complete, right? Terra has made it clear that they want to be one of the largest holders of Bitcoin in the world to back their stablecoin. So I think you're going to see the buying pressure from not only Terra, but from Michael Saylor, and I think that that's going to start to trigger more people to be using Bitcoin as a quote-unquote backing or reserve currency, kind of like the gold standard. So I am still absolutely bullish on Bitcoin for the long haul. Again, I think I mentioned yesterday, I still think there's a high probability, over 50% chance that we're going to see Bitcoin close at over $100,000 by the end of the year. I know it sounds insane, but yes, I am accumulating. I'll buy probably $1,000 or $2,000 a month just of Bitcoin, and that's not on top of much bigger acquisitions I'm making. I'm making acquisitions. Much bigger purchases I'm making in different cryptocurrencies. So the biggest addition I made recently was I bought some more Engine, I bought some more Avalanche, so I've been building different positions and just kind of spreading my portfolio out. But yes, I am definitely bullish on Bitcoin. Why don't we just take a look at that one real quick? Here's your BTC, 46.3. Did exactly kind of what I thought it was going to do, which is going to pull back to this 45,000 mark and bounce right off it. Now the question is, what's the next leg look like, right? Does the next leg break 48,000? If it breaks 48,000, I think we're headed for a big run. Right? And I agree. Big Eb says 60,000 this month. I think you're going to be damn close. But remember, 60,000 would be a 30% increase from current price. So that's obviously a big jump. But I do think you're set for a big rally here in Bitcoin if we can get above this most recent high we established this week, which was 48,000 and change. Chase Ryan says, I think we could hit sub $30,000 if the broader markets continue to decline. Also, you think Michael Saylor would get margin called in this scenario? No. Here's why. First off, he's paid cash for his Bitcoin positions, right? So he's been taking out loans, acquiring Bitcoin, so he's not using margin. The only area he's putting him at risk now is with this collateralized loan that he's just made with Silvergate Bank. However, that's a 4-to-1 collateralized loan. So Bitcoin would have to drop 50% from current levels before his loan would be called. And I don't see Bitcoin dropping all the way down to 23,000. I don't see that happen. I agree with you, Chase. I think $30,000 is a logical target. I mean, you can kind of see it on the price charts here. 30,000 goes way back to this low we saw in July. So it could certainly happen. But right now, it feels like it's gathered a footing, right? And we generally see this with Bitcoin. It has these huge up moves, and then all of a sudden it comes ripping back down. It finds a footing, and then it starts up again, kind of like it did right here, right? It had this aggressive sell-off in April of 2021, sold off real hard, kind of found a footing, didn't really make a new low, and then all of a sudden started to break out, make some new highs, and boom, off to the races. So my general feeling is we're going to get that kind of same dynamic here where it's found its footing, feels more stable. It actually looks stronger than it did back in May, from May through July of 2021. It looks better because it's been making higher lows along the way. So, I'm expecting this to kind of make some breakout here and continue on to the upside. And Chase says, you're absolutely right. It seems to be following the QQQ and the Russell. It seems to be following the broad market indexes for sure. And at some point, I think the belief is that that'll decouple and we'll all of a sudden get it having a mind of its own. But I don't know. I don't know how that'll end up looking and if there will be a decoupling. It seems to me like, especially over the past few months, they've been tied fairly closely together. Here's your Bitcoin price chart. Here's your S&P. The S&P obviously having this monster rally. Bitcoin really didn't have that type of rally that the index had. A slight one, but nowhere near that one. So, all right. So then we got the cocktail question out of the way. Mr. McGinnis been sending me a few questions on the YouTube channel. Of course, if you guys would like to get your questions answered first, you can go to YouTube, put your comments and questions below the video. That has been great. I appreciate those of you who have been doing that. Mr. McGinnis says, any thoughts, suggestions, resources, referrals, or experience with setting up a trading business? Questions have advantages and disadvantages, separate personal assets like house, personal banking. There's a lot of different, the list goes on and on and on with regards to benefits, and there are some drawbacks as well. And again, this is something you'd have to talk to a CPA about to get much more clarity. But when you have trading as a business, there's a lot more deductions that you can do. One of the ones that has been very popular for a lot of my friends because they trade, they take classes and travel. If you wanted to go to, let's say, the online training academy in, Fort Lauderdale, right? Well, you could fly to Fort Lauderdale, you could take an OTA class there, and that now becomes a business expense. And of course, while you're there, you have food and everything to go to this business expense to help your business, which is trading, and that all becomes a deduction. Where in normal life, when I do my day-to-day, or for most of us do our day-to-day activities, those aren't deductions. And the more that we can take off of your daily life expenses, the more money you put back in your pocket, because you're gonna buy that sandwich anyway. But instead of paying $10 in after-tax profits for the sandwich, you can now take it out of pre-tax profits and pay much lower tax, have a much lower tax burden. So one of the main reasons is the amount of things you can deduct: travel expenses, office space, renting out part of your house to your business. Right? I've got a whole studio here. Well, this room right now is used exclusively for TraderMerlin. So that's going to be rented out to the TraderMerlin Corporation, which I have as well. So those are all going to be deductions. And now that square footage becomes a deduction that I take against any gains that were made under TraderMerlin. So there's a lot of things you can do. Again, I am not a CPA. I'm not a tax person. But having a corporation and utilizing it, I think is a really important thing to do. You really want to, I think your goal should be to incorporate yourself, right? Turn yourself into a corporation. You look at these numbers, and I think a lot of you probably are pissed off that some of these entities, I think Amazon's famous for it, Apple as well, paying almost no money in taxes. You're like, but they make billions of dollars. Well, what they're doing is they're taking and not abusing anything. But there is a legal code, which we could argue whether that's a good legal code or not, if it needs to be revamped, but it's there, and there are all of these things that companies can do to, instead of paying taxes on this money, put it somewhere else and not pay taxes on that, or reduce their overall tax exposure, writing off all of these different things, and that's pretty much what most really wealthy people are doing. Right? Business owners have businesses and they're not just deducting as much as possible. So when it comes tax time, it's like, yeah, we made $6 billion. Oh, but I had $6 billion in expenses, so no taxes. And part of that expenses is your salary, travel cost, all that stuff that you'd be paying for out of your own pocket normally. Lori says, I love my LLC. Worked well this past year. Cool. Merlin, how many years you need to be profitable so you can make it as trading as a business? Well, look, everybody's going to be different. I know people that their first few months, all of a sudden, they've grasped it and they're doing really well. I know people who have never made it as a trader, and who knows if they ever will. I think a big piece of it comes down to mindset. I saw a great pie chart, and it was, let me see if I can draw it, because it was kind of... I'll keep it PG because there's an R-rated version to it, of course. Let me see if I can bring this up for you guys. There we go. I just need a blank screen so I can show you this pie chart. It was really funny. I'll draw it out, but this pie chart was hilarious. It looked like this. Come on. Come on. Okay. So you got this little sliver here. And then you have this monsters pie chart. And it was this little arrow and said, mistakes I made. And then the rest of it, this giant piece of the pie here, it was a different word. It was damn market. And I think that really embodies a lot of people's beliefs and attitudes towards the market. You know, they'll look at it and go, oh, well, damn it, I didn't do anything wrong. I followed all my rules. Damn the market, or damn somebody else. And they point the finger repeatedly at other people. You know, I've seen a lot of tweets, a lot of posts. I've had a lot of emails from people that are like, oh, well, you know, OTA, Online Trading Academy sucks because I'm not making any money at it. It's like, well, look, there's nothing that you're going to take. You're not going to take in a course anywhere. And you pay your whatever, 5,000, 10,000, 100, whatever the case may be. You're not going to do that and immediately come out and be just pinning the ears back on Goldman Sachs and being the top-notch trader. There's a learning curve to it. And I think most people don't make it through that learning curve. They want to point the finger at somebody else because they didn't succeed. I know we've got some engineers in here. I know we've got some very successful business people in here. You don't get to where you're at by somebody just handing you out everything you wanted and patting you on the back. You work your butt off for it, and you work hard. And you have to review, you have to analyze, you have to know that there's always changing market dynamics. And if somebody messed up and lost money, it's because of something that you did, whether it was not adhering to stop losses, trading too big a share size, taking overnights, trading the volatile stuff, going all in on Dogecoin, or following some 14-year-old snot-nosed kid in his mom's basement on Reddit. That's on you, right? And I'm not saying that it's a generalization, but I think we all have to be, I guess, careful and understand that this is hard. This is very hard. So NJ, I can't say how long it takes you to make it as a trading business. I think once you get to the point that you can prove to yourself and show that there's some semblance of consistency, granted, nobody's perfect all the time. You're going to have your ups and your downs along the way. But as soon as you get to that point where like, okay, I'm feeling comfortable, I'm following my rules, I'm not taking huge losses, then you may start to increase your share size a little bit. And as you start to get bigger and better, then the money will start to manifest. And from there, you go, okay, now that I've got income streams coming and money from this, how do I keep as much of that as possible? So for most of you that are just trading on your own as ordinary income, you can't really deduct much. Can't take anything off. But if you're trading as a business, boom, my monitors are written off. Every cable I'll buy is written off. Renting out office space in my home, these lights are written off. I mean, the curtains I bought for this room, written off. Why? Because I need them to keep this room dark so I can get the lights to work. I need it for the show. Anyway, sorry, I'm venting. I started making money, paid myself, back road TA within 3 months. Wow, Lori, awesome. That's impressive. 3 months is pretty good. Usually I would say 6 to 9 months before people really get it. And normally what happens is it's not that they don't get it. I think what happens is most people are just not following the rules. And as soon as the market kicks you in the teeth, all right, and leaves you with a bloody nose, you're like, oh, wow, they were saying all these things for a reason. I'm supposed to do this because I don't want the market to kick me in the teeth anymore. And as soon as you get booted in the face a couple times, you realize, okay, I got to write down my rules. I need to follow those things. And awesome. Good for you, Lori. That's great to hear. Let's see what else I got. Those corporations pay lots of other taxes, like half as good. Yes, that's true. It depends which one, right? Because you've got LLCs, you've got S corporations, you have C corporations. So there are different structures that you can use. Again, talk to your CPA about what might be best for you. And I agree with Jeff. Jeff says, NJ, protect your capital. Can't trade if you have no capital. Yep, exactly right. If you lose all your money, game over. So the key is to preserve your capital. Unfortunately, what happens is people start to lose and they trade even bigger to make up for those losses, where they should be scaling back and trading smaller and smaller and smaller. I think I told you my old mentor, I asked him, I said, how do you dig your way out when you go on a losing streak? Because I was on one. I was on one of those streaks that just was a never-ending losing streak. It seemed like if I looked at it, it would just go down, right? Go against me. So he says, look, if I'm on a losing streak and I know it, inside my brain, he goes, I believe that I'm manifesting more losses because I'm negative. I'm psychologically saying I'm a loser because I keep losing. So what he says is he goes back and he'll go down to one share. Literally one share of something. So you got one share of, I don't know, pick Microsoft, right? Who cares? Cisco, something cheap. And he says, I've got one share. And if I can just make money with that one share, then psychologically, I've broken my losing streak. And now I can start to think positively again. I can reconfigure NLP in my brain, get that neuro-linguistic programming to switch things around. So I think that's the key, is knowing when you're losing, slow it down. If you're still losing, then stop for a while, regroup, remap out your plan, and then go back in and try to take it. Fernando says, took you 3 years? Yeah. Well, I'm glad you made it. I'm glad you made it, Fernando. A lot of people don't. A lot of people don't. What does Tom say? Yes, the rule followers. All right, I didn't realize that I was going on just a rant for the show today. Sorry about that, guys. So, Mr. McGinnis, I definitely think it would be a plus, but it's really as if you're making money. If you're not making money, there's really not much point to starting a business. I mean, there are some perks, but overall, it's really if you've got income streams coming and you're making money from it, you got a lot of gains, set up a corporation and write off as much as you can. I mean, hell, you got new Brent pens for the office? Write that off. You buy new shirts because you need clothes for, to get on stage presentation? Write that off. Write off whatever you can within reason, without violating any of the laws. But I'll tell you what, the IRS puts a lot of provisions in there which allow you to write off a ton of stuff. All right, KF asks this question: what are your thoughts on Kitco News? Aren't they a little more accurate compared to the guys on CNBC? Look, in my opinion, CNBC is edutainment. CNBC is there to, I guess, make people feel happy about the markets. They are paid for by corporations. Their advertisement is paid for by publicly traded companies generally. So they want positive, that's going to be spun. They won't say bad things about anybody who sponsors that show because, hey, there you go. We don't want to, ruffle your feathers, Mr. Sponsor, which is part of the reason I think I got kicked off of CNBC back in 2008 is because I said, break out the bulldozers. We're going down in a big way. And, I was never contacted again by CNBC. I was told to leave the studio. Is Kitco better? If you again go to my 10 laws here, rule number 3 is ignore the news but listen to every word of it. Well, I think it's important that, maybe CNBC is your news source or maybe it's Kitco. Just remember, I believe everybody has an agenda. I think anybody who's out there giving news and saying, hey, here's our take on this story, I believe they have an agenda. Almost everybody. Actually, we interviewed Dan Roberts of Decrypt the other day. And Dan Roberts, one of the reasons I wanted to have him on, and I hope to get him on again in the future, is I believe that he and his team, I haven't read I've read some of his colleagues' materials, but I know from what Dan Roberts writes, he is very middle ground. And he's not going to really overtly display his opinion, where I think even Kitco and CNBC, they're going to show their opinion out there. And again, are they being paid by sponsors? Do they have somebody who's saying, hey, it's really important that you guys talk about this company tomorrow and make it sound really good because earnings coming. Again, watch the video by Jim Cramer on YouTube. It's just type in Jim Cramer manipulation. If you haven't seen it, watch it. It will make you, I guess your love of financial markets might drop a little bit. And what you feared to be true will be evidently true there, which is this is one gigantic, rigged, manipulated game on behalf of those who have money and those who have voices and power. So is Kitco better? I would probably say yes. But again, they're going to be biased to what might benefit them. So you might see them say very positive things about commodities because Kitco is one of the largest, gold and silver companies out there. So there you go. Are we the taxpayers supporting your whiskey habit via write-offs? Asking for a friend. No, actually, the whiskey is not written off. That's on me. It's coming out of my pocket. All right, let's see. What else we got? It's yes. Good, NJ. I mean, some people look at that and go, man, you paid way too much money. Some people say for what you got out of it, it was worth it. So it's all a matter of personal perspective. I think from my experience, it was worth every penny I paid for my education. And one of the common phrases I love is, oh, you think education's expensive? Try ignorance. All right, last one. This is from Mr. McGinnis as well. He says, I'm looking for a broker for futures trading and was wondering if you know of any good reviews of brokers or have things you look for in a broker trading futures. I will say very clearly and simply, Trade Pro Futures is where I trade futures. I just know the guy Trey Lazera. He's a great guy. I mean, it's hard. It's very different when you call a company like TradeStation and try to get tech support. You got hundreds of different people on. They don't care. They don't know who you are. It's just cold and callous. Trey and his team. I mean, Trey will literally get on the phone with you and walk you through problems. And he's the CEO. So Trey Lazera is a guy I worked with on the trading floor back at Online Trading Academy in Irvine in the late 90s. He was the chief technical officer, and he's been running his own futures trading firm for a long time. He's awesome. He is just a great guy, and he runs Trade Pro Futures. They have some of the best margins in the business, and they give you a ton of different platforms. So you're not locked into one platform. Choose which one you like the best. I like MetaTrader. MetaTrader has been one I've used a lot. So MetaTrader 4 was great. MetaTrader 5 is great. That's what I would be looking at. And you asked a couple of other questions here. Also notice that TradePro Futures have a list of platforms they offer. I'm not familiar with platforms they listed. There was no CliK. Yeah, CliK's not out yet. We're still trying to figure out the bugs, I guess. I'm paying for the development to get this platform up and running. It's kind of unfortunate. I would love it to be released years ago, but these things take time, and hopefully it'll be out there soon, and you will be able to connect with somebody like Trade Pro Futures down the road. Yes, can you check the yield? It seems the 2 is higher than the 10-year. Yes, it was, Zed, good point. So it was briefly. I tweeted that out last night that we were officially inverted. By the way, we have officially inverted on the yield curve, meaning a recession should be coming sometime soon. So here you go. And it was short. This right now that you're looking at this is mapping the difference between the 10-year and the 2-year. All right, so it's taking the 10, subtracting the 2. Right now, you will be getting paid more to buy a 2-year treasury as opposed to buying a 10-year. That's inverted. It shouldn't be that way. You should be paid more to buy the 10-year. So there you go. That is not a good situation. And don't look at the rate of return down here. It says negative 26,000% today, or 2,600%. And with small numbers like this, no big deal. But we are inverted, and right now it's falling even faster. So, going into the weekend, I'm hoping that most of you are flat. When you go into a weekend and something has such an aggressive day like the bonds did today, at least the inversion, it wasn't like bonds are that great. I mean, the 10-year was up 1.88%. You start to get that inversion. That could send some shock through the markets over the weekend. Plus, you see what happens with European Union and Russia with regards to paying in rubles. There's a lot of really potential negative things going. But right, Zed, that is an inverted yield curve. We are officially inverted. No one can refute that. It is a fact. And, I guess the question is how long until we feel the impacts of that. I know some of you might think it's a long time. Some might think it's going to be a short time. There's actually facts out there. There's some interesting numbers on that with regards to how long it takes to come to fruition. So historically, the S&P, just to put it into perspective, right? The last 4 times that the yield curve inverted, and here you can see we've inverted today. I can go back to the daily and show you last time we inverted was back in August of 2019. The last 4 times that the 10-year has inverted over the 2 has inverted the 10, the S&P averaged up 28.8% before it peaked. Let me just say that again. It ran up 28.8% from that point. So let's look at the S&P 500 and see what that might look like. Here's your S&P 500. I'm going to change the scroll here a little bit just because that's going to be a little challenging for me to get this number precise. Bear with me. I know I'm snoodling all over the place with this. And we're going to go trend line, and I'm going to do it right to there. And 28%, let's go 28.8% would put us right about 5,848. 5,000 on the S&P. We are at 4,500. So that literally would be putting another 1,300 points on the S&P before it peaked. That's the average. The ultimate peak was generally 17.1 months later. So here we are in April of 2022. So let me see if I can draw the line here. So bear with me. This is going to take some artwork. I got to figure out 17 months. But April 2023 is right there. Let's see, April, May, June, July, August, September. So I got to go to September of 2023, which would be, I'm drawn, and that would be right about there. So that's the time frame that historically, at least over the last 4 inverted yield curves, that it's ran up 28.8%, and it took about 17.1 months there. And then the recession started 21 months later. So that would be 4 months after this. So you're looking about January 2024. I think Big Eb, I believe you were saying recession coming in 2024, right? Or is it 2023? Either way, these numbers point to markets still going up for a while before they ultimately crash. Now, again, everything works until it doesn't. The history is no indication of future performance, right? You see it in all your statements. But thought I would throw that out there. I think those are some very interesting numbers to take with us going forward here. I still am bearish because I believe this whole thing's going to come crashing down. But statistics tell us markets are most likely to keep going up for a while. All right, Merlin, how come when I zoom out on the chart, the yield prices change? I don't know. Man, people are going to need a good... I agree, Joe. I agree. All I do, I just love looking at this. This is one of my favorite things to look at. I know I'm a weirdo, but I just love to look at a monthly chart of the S&P. And I know I've shown you guys this many, many times, but I just love looking at this picture right here. It's just so amazing that these yellow boxes are written about in collegiate textbooks on economics and finance. This is the dot-com bubble, and this is the financial crisis. And here we are in one of the most ridiculous, unbelievable moves. Oh, sorry. Tom's here. I better put this on a logarithmic scale. Okay, there you are, Tom. Got you on a log scale. Still, doesn't matter. All right? These yellow boxes are historical moves. And we're not really talking about this historical move to the upside. We will be talking about the historical move to the south side when it finally crashes. Oh, Katut, you asked me about something. What did you asked me about Mara, right? I think I got 3 minutes left till Big Eb wins. So let me go to Mara here, and then I'll wrap up. So we talked about Marathon the other day. Here's Mara. I'm not sure why I had that red line drawn. You know, I'm overall bullish on Marathon. However, look what's going on right now. You've got this big run up. Oh, let's take it off logarithmic scale because we're not going that long term. All right, here we are at a point where you've had a pretty good run up over the past month, but it's really just been chopping sideways. Now, the good news for anybody who's trading Mara is you've broken out of this. To me, it's just retesting the breakout. So I would be on the sidelines here until it starts to break above those highs. So I guess if we get above 32.75, then I'd be adding to it. But it looks great. It's stabilized. It's been, hasn't made new lows. It's actually made some new highs. So all in all, I think that this looks great, at least because it's breaking out. And I like what Marathon's doing. I think that they're probably a good long-term hold. So I'm bullish, but I would wait for confirmation and a break above 32.75. All right. I got 60 seconds left until we got to run out. So I'm going to end this one by saying thank you guys so much. Cheers. Hope you have a fantastic weekend. Go do something fun. Enjoy your life. Make it worthwhile. Spread some love out there and be good to people. If you guys have comments, questions, feedback, put them down below the YouTube video. That helps me out. If something you want me to discuss on the show, you can also email me at TraderMerlin@gmail.com. That said, I'm going to have to wrap things up here so I can get out. But NJ, thank you so much for the contribution. NJ, I'm going to see, because NJ did that, I was going to wrap up, but he sent in a contribution. I can't not look at MJ. Same thing, NJ. Right there. You basically just tapped its head up against this $11 mark, which we had this line on here for a while, actually. Broke above it. I would wait for a close above this before you start going into MJ. Again, long term, MJ I think is great, but you look at what's been going on. This is just apocalyptic slide in MJ. So we're at a point where it's still technically trending down. What you need to make sure it has is a new high put in and then hopefully not break new lows. All right, there you go. Thanks, everybody. Hope you all enjoyed it. Sorry for the short week, but it was fun for me. I hope you guys have a great weekend, and I will see you all on Monday's show. Take care.